Achieving a really good credit score is a powerful financial goal. Not only does it open doors to lower interest rates and better loan offers, but it also reflects your reliability as a borrower and can influence many aspects of your financial life, from renting an apartment to landing your dream job. But how exactly do you build, maintain, and improve your credit score? Let's explore the essential steps, habits, and strategies that can help you reach and sustain an excellent credit rating. First, it's important to understand what a credit score is and how it's calculated. Credit scores, often ranging from 300 to 850, are numerical representations of your creditworthiness. The most commonly used score, the FICO score, is determined by several factors: your payment history, the amounts you owe, the length of your credit history, the types of credit you use, and any recent credit inquiries. Each of these components plays a role in shaping your score, and understanding them is the foundation of improving it. Let's begin with payment history, which makes up the largest portion of your credit score, about 35%. Lenders want to see that you pay your bills on time, every time. Even a single late or missed payment can have a significant negative impact. To avoid this, set up automatic payments for your credit cards, loans, and utility bills. If automatic payments aren't possible, set calendar reminders or use budgeting apps to alert you before due dates. Consistent, on-time payments over months and years will steadily build your credit reputation. Next is the amount you owe, also known as your credit utilization ratio. This measures how much of your available credit you're using. For example, if you have a credit card with a $10,000 limit and your balance is $2,000, your utilization is 20%. Experts recommend keeping your utilization below 30% and ideally below 10% for the best impact on your score. To keep utilization low, pay off your balances in full each month, or make multiple payments throughout the billing cycle. If you're carrying balances, focus on paying down high-interest accounts first, but make sure to pay at least the minimum on all your debts. The length of your credit history also matters. Lenders like to see a track record of responsible credit use over time. If you're new to credit, you can still build a good score by opening a credit account and using it wisely. But the average age of your accounts will improve as you keep them open. Avoid closing old credit cards, even if you don't use them often, as this can shorten your credit history and reduce your total available credit, which may raise your utilization. Diversity in your credit accounts, known as your credit mix, can also help your score, though it's not as critical as payment history or utilization. Having a mix of credit types, such as a credit card, an auto loan, and a student loan, demonstrates that you can handle different types of borrowing. However, don't open new credit accounts just for the sake of variety. Only take on credit that fits your needs and budget. Hard inquiries, which occur when lenders check your credit for a new application, can cause a small, temporary drop in your score. While one or two inquiries won't hurt much, several in a short period can be a red flag to lenders. If you're shopping around for a loan, such as a mortgage or auto loan, try to do all your applications within a short window, typically 14 to 45 days, so they're counted as a single inquiry for scoring purposes. Avoid applying for unnecessary credit and be strategic about when you seek new accounts. Now, let's talk about building credit from scratch, or rebuilding after a setback. If you have little or no credit history, consider starting with a secured credit card. These cards require a refundable deposit, which becomes your credit limit. Use the card for small purchases and pay the balance in full each month. Over time, responsible use will help you qualify for traditional unsecured cards. Alternatively, you can become an authorized user on a family member's credit card. As long as they use the card responsibly, their positive payment history will be reflected on your credit report as well. If you're recovering from past credit problems, such as missed payments, collections, or bankruptcy, focus first on stopping the damage. Bring any past due accounts current as soon as possible and communicate with creditors if you're struggling to make payments. They may be able to work out a hardship plan. Over time, negative marks will have less impact on your score, especially if you establish a new pattern of on-time payments and low balances. Monitoring your credit is another essential step. You're entitled to a free credit report from each of the 3 major credit bureaus: Equifax, Experian, and TransUnion, once a year through annualcreditreport.com. Review your reports for errors or fraudulent activity, such as accounts you didn't open or incorrect late payments. If you spot any mistakes, dispute them promptly to have them corrected. Many credit card companies now offer free credit score tracking, which can help you keep an eye on your progress and alert you to changes. Smart credit management also means being cautious with your spending. Avoid maxing out your credit cards, taking out loans you can't afford, or using credit to cover everyday expenses. Instead, use credit as a tool to enhance your financial flexibility, not as a substitute for a solid budget. Finally, remember that building a really good credit score is a marathon, not a sprint. Consistency, patience, and responsible habits are your best allies. Over time, the rewards will add up. Better loan offers, higher credit limits, more negotiating power, and the peace of mind that comes with financial security. In summary, achieving an excellent credit score involves paying your bills on time, keeping your credit utilization low, maintaining a long and positive credit history, using a mix of credit types wisely, and being mindful about applying for new credit. Regularly monitor your credit reports to ensure their accuracy, and focus on healthy financial habits every day. With dedication and discipline, you can build and maintain a credit score that sets you up for financial success and opportunity for years to come.